Well, good morning to you. I'm Pete Najarian. This is the Take for Market Rebellion on this Wednesday. Sorry about some of the technical issues that we had yesterday. Hopefully, we've gotten past that. We'll find out pretty quick, I'm sure. A lot of you are great about sending me emails and texts about, hey, Pete, the sound is wrong, or whatever it might be. But if we look back to yesterday's market, that's where what we're here for. We look back to yesterday's market actually started off pretty nice. You look at the Dow was right around that 35,000 level. That was pretty impressive. We were moving in a nice way to the upside, and then it looked like the bottom just fell out. And suddenly we go from being up 100 points. Next thing you know, we're down a couple hundred points, and we finished the day down nearly 300 points, 292 points on the day to the downside. So a really big shift. And then the same thing sort of playing out for the most part when you're looking at the NASDAQ. The NASDAQ up over 15,000. It perked up. It looked pretty solid. And the next thing you know, we start to get that sell-off there as well. That sell-off being pretty harsh, sold off. It finished the day down, call it 67 points, somewhere in that sort of a range. The range of the VIX, however, yesterday, that got a little bit broader. We were somewhere between 18 and 20 and a half. Now, we didn't stay above that 20 level, and that's something we've been talking about time and time again, including today. I'm going to touch on that. But we did pull back. We finished the day down about, or on the day, about 1940. So interesting, but that volatility is becoming volatile itself in the movement, and it's getting a little bit broader, it seems like, each and every day in terms of the range that we're trading in. We watched crude make that nice move up over 70, got up towards 71, and that really was where energy started the day up pretty nicely. Is up about 0.5%. Finished on the day down 1.5%. So it gives you a little idea of what was really flipping and turning when that market was looking so strong early. And then suddenly we started to see the major indices start to push to the downside. Financials, they were under pressure, down about 1.5%. Industrials down a little over 1%. Materials down 1%. You get the idea. A pretty broad swap of just moving things to the downside, all down 1% or more. What wasn't down and hit new highs, the semiconductor index, the SMH. Now, we talk about this all the time. It's a subsector, but I'll tell you, it was pretty interesting and a nice move to the upside. It's been on this path. It pulled back for a little while and then started to move higher and move higher and move higher. And now again, as I say, established new highs yesterday. Didn't close on those highs, but still closed in the green. And it was names like AMD and NVIDIA and some of those names that were definitely helping as that push to the upside was happening. What wasn't really working yesterday, and we've heard a lot about it, a lot of people trying to catch that falling knife. How about those casino stocks? Oh my goodness. They just continue to get pounded and pounded. And you just wonder at what point in time do we see more of an exodus? Well, that's something we might touch on as well. But you look at Las Vegas Sands, that was down close to 10%. Wynn down over 10%. MGM down the least, but down about 4%. So some pressure on the casino stocks. Another area that had some huge pressure we don't talk about very much, and we don't see that movement like we did yesterday, but Comcast yesterday was down 7%, and that was a pretty good hit to the downside as well. NetEase leading the Chinese names once again, as those Chinese names were definitely under pressure once again, and that was part of what was pushing around the NASDAQ as well. And we've talked about that time and time again. We started off today fairly quiet. Markets were just up or down 20, 30 points, and it stayed sort of in that sort of category, up, down 30 points on the early side of things. Then we started to see the move, and the move began, and when suddenly the NASDAQ starts to move into negative territory, while the Dow just continues to push to the upside, up 75 points, up 100 points. Last I looked, it was up somewhere about 50 points or so, but we are starting to slip on the NASDAQ itself. So the NASDAQ was down about 30 points. We did see volatility pop over 20. We're hanging around in the 19s. It was up over 20 very, very briefly, just in a blink or two, pulled back, and it was still right around those upper 19s. But looking at that 20 level, because it has been such an interesting spot for the volatility index. When I look at the sectors, the sector that really stands out, and I said sectors, but there's only one that really stood out, and that's energy. And energy started off strong. You take a look at the XLE, but take a look at the XOP and many of the names that are within that indice. I'll tell you what, these ETFs, you really do get a pretty interesting, very rapid look at where things are really changing and moving. And I'll tell you what, I saw the XOP, I want to say, I think I saw it up over 4%, at least at one point. We see crude oil moving up over $72 as well. I'll tell you, the 10-year It's been hanging around that 1.3, but it's been hanging around on the bottom side of that 1.3, holding at a little bit in the area underneath 1.3. We'll see if there's more pressure on that or not, but that's something that definitely we're watching very closely, especially because of the relationship of that, along with the financials that has been very critical. Financials started the day up decent, a little bit with the materials, nothing huge, but up okay. But I'll tell you what, that early move that we'd seen from energy up 1.8%, then it was up 2.5%, up over 3.5%, and it's been moving around in that sort of a range. I'll tell you, absolutely unbelievable. Consumer discretion, that's getting hit pretty hard. But today, the standouts, again, I keep talking about energy. You look at Marathon, you look at Diamondback, you look at Devon, you look at Occidental, all of those names, ConocoPhillips, very, very strong, at least in the early hour of the day. EOG, another one of those names you don't talk about enough. COG, a name that I had for unusual not too terribly long ago. And again, the casino's just getting whacked. Take a look over at what's going on today again with Wynn and with Las Vegas Sands. Down 3%, down 8%, just really taking it on the chin in a bad way. So I got two unusuals for you. We're going to get out of here. XOP, I've talked about it a lot, but we're also seeing unusual option activity in there. It's a pretty interesting one. Stock was trading right around, or the ETF trading right around 89.25. Now, the October 89 calls were the calls that were in a great position for the folks that were buying those calls a while back. They're rolling out of those, selling 8,000 of those, but they want to stay in the trade. So you're taking some money off the table and still wanting to be in the trade. They bought 8,000 of the October 94 calls, paid about $2 for those calls. Another energy name, and oh, by the way, as I'm looking through the unusual options, we are dominated today by bullish paper in the energy space. We started seeing that way back in November of 2020, and we're continuing to see that. It seems like week after week after week, but today, energy absolutely dominating what we're seeing in terms of the unusual options. So California Resources Corp, CRC, a name that you don't probably know real well. You probably haven't seen that name, and we haven't talked about that name a whole heck of a lot, once or twice here and there. Stock was trading right around 44, a little bit higher, 44.25. But the interesting thing is here, they're actually going out in time. They're going out to January, buying a little bit of that time value of this and deep in the money. So they're buying the Jan 40 calls, 5,000 of those calls going for anywhere, call it about $8 because they went from $7.80 up to about $8.10. So call it $8 is what they're paying for those calls. I'm going to give you a quick thing here. Why would they buy that deep in the money call going out into the future? It's basically a surrogate for stock. It's a very inexpensive way, or a much less expensive way, to be able to position yourself into a stock and give yourself a little bit of time out in the future. That's what we're seeing here. Are they expecting something that's going to be an absolute monster of a move? Probably not, but there's definitely somebody who's out there looking, thinking that this could be a stock that starts to move to the upside, and they've got a nice window of opportunity going out to January for these options. So we'll keep an eye on that as well. Folks, have a great day of trading. Knowledge is king. You definitely want to get the knowledge about the derivatives markets. I didn't even mention this, but again, I believe the volumes yesterday around 34 or 35 million contracts. I'm not sure exactly, but just continues to be the place to be. We got great educators here. Get yourself a book, get yourself the information you need, but the derivatives market is the place to be. Have a great day of trading and best of luck to you.